Markets are higher this morning. Take a look. Futures indicating a gain at the start of trading of about 89 points on the Dow Industrials. That's 0.25%. The Nasdaq up 24, and the S&P 500 higher by 9.25. This after U.S. markets snapped a three-day losing streak yesterday with a big rally, pushing the Nasdaq back into the green for the week. The Dow Industrials and the S&P 500 now less than 2% away from their record highs. We are looking at the Dow yesterday up 188, and the Nasdaq up 236, and the S&P 500 higher by 43 at 4 o'clock on Wall Street yesterday. Joining me right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Fox News contributor Liz Peek. Great to see everybody this morning. Thank you so much for being here. Dominick, kicking it off with you. You think we could retest recent lows?
Yeah, we've had a little bit of a pullback, right? The Nasdaq pulled back 8-9% off its all-time high, and the S&P about 4-5%. It's kind of normal. It's that time of year. We've had good earnings, and the overall economic data has not been terrible, but it hasn't been great either. We tested, a little bit of a pullback. Wouldn't be surprised over the next couple of weeks if we did it again. Again, it's lack of data, lack of noise. Things get a little blasé this time of year. Do not look at that as a selling opportunity. You really want to accumulate more shares. You really want to put more money to work. Any pullbacks at all.
So you believe that any pullback is a buying opportunity, even with some of these headwinds coming at this economy? You've got worries about inflation. We are seeing real evidence of price increases in the food space, certainly, and even some construction like lumber, even though it has come off of the worst of it. But we're also expecting higher taxes. Any of these headwinds give you pause about buying on any dip?
So the inflation front is probably the one that worries the markets the most, and probably the number one reason why we did have the pullback that we did have. And I would think that's going to happen again as this noise. But hopefully inflation abates later on this year. Taxes are a really big deal. We saw what happened with the markets when we got the Trump tax cut. We saw a substantial increase in the values of the S&P companies. A big tax increase to corporate America would do the exact opposite. A big tax increase to individuals, these are primarily small business owners, that also would be detrimental to the economic growth. You're taking the money out of the pockets of the most entrepreneurial people in the whole country. That would worry me. I don't know if it's going to happen this year. It looks like it might be a next year event.
What do you expect in terms of the Federal Reserve? We had those Fed minutes yesterday signaling an ongoing improvement in the economy that may warrant a policy review, is what we heard from the Fed this week. How concerned are you about the Federal Reserve changing its language or changing policy to reflect inflationary growth stories that we're seeing in the U.S.?
I think mirroring the pace of the vaccinations, the economic growth, the way the economy has expanded and opened up has been a lot faster than what the Federal Reserve thought it was going to happen. So they had a timeline that literally took us into next year. They're starting to very subtly hint that they're going to have to re-examine that policy. At some point, obviously, they're going to start to slow down their bond buying program. Their interest rate structure here really is distorting the markets, the bond market, the mortgage market. They're going to have to try to normalize it. They're going to give us a lot of warning, but I think they're still going to err on the side of being a little bit too slow instead of a little bit too fast, which again brings it into 2022.
You know, it's interesting, Liz Peek, jump in here because you're talking about an economy that is strengthening on its own, even as we're talking about the potential of $4 trillion in additional stimulus being thrown at this market and this economy, while the Federal Reserve keeps rates where they are. Your thoughts?
Yeah, I mean, I think that the bond buying program absolutely has to go. I see no justification for it whatsoever. Maria, I think the other thing is there's no justification for $4 trillion more in spending. So I think it's not just that we're kind of anticipating some change in the Fed. I think we're at a real inflection point here where people are going to be more concerned about real organic growth going forward and not the assistance of the Fed or the assistance of stimulus. So the question, I have a question, which is, What about Europe? I think you're a little bit bullish on Europe, is my impression. Are they just enough behind us that investors can catch the wave there as they have in the U.S.?
So Europe announced yesterday, the day before, that they're finally going to start opening up the borders and letting American and other tourists come in. They desperately need that. Again, you think about the small business owner, the shops, the restaurants. They desperately need that tourism. It's part of their economic growth. But if you look at the stock markets, they've done well year to date, but nowhere near as well as our markets have done. Valuations are substantially lower than our company versus company. Their valuations are a lot lower than ours. I think they are at the beginning, maybe where we were 3, 4, 5 months ago. They're behind in the vaccinations. It's going to take them a lot longer. It's going to be a lot slower, but it might be a terrific entry point. We just added to the international space. We added the Schwab International Large Cap Fund, FNDF. I think it's a good core position, at least for the next 6 to 12 months, and may be adding later on if we get a little bit of a pullback.
All right, Dominick, great to hear from you this morning. Thank you so much. Dominick Tavella joining us there with insights on this market where we are expecting a gain at the start of trading. Dominick, we'll see you soon.